Welcome to this explainer. Look, if you're joining us today, you are probably navigating a super high-stakes environment where, honestly, one innocent little paperwork mistake can just shatter years of planning. We're going to unpack the exact source of funds documentation rules that can literally make or break an EB-5 visa petition. I want to start by revealing a reality that catches so many families completely off guard. Even a totally legitimate million-dollar EB-5 investment can be denied outright simply due to sloppy paperwork. It isn't always about the money being illegal. It's about how you tell the story of that money on paper.
So here's our roadmap for today. We'll cover the high stakes of EB-5, the crucial difference between source and path of funds, common documentation minefields, the strict 2026 adjudication changes, and finally, building a bulletproof file. Let's get right into it.
Section 1. The high stakes of EB-5 and why valid funds actually get denied.
The devastating reality of EB-5 is that most petitions fail, not because the money was illegal, but because of a paperwork gap. We're talking about massive financial stakes here, right? $800,000 or even up to $1,050,000. And yet, if your paper trail contains a single unexplained transfer, you're looking at a denial. Adjudicators review these documents with a microscope. And honestly, if there were an Olympic medal for bureaucracy, USCIS would take the gold every single time. This intense scrutiny is exactly why so many dreams are just halted right at the request for evidence, or RFE stage.
Moving on to Section 2. Source versus path of funds. The two mandates.
Okay, let's dive into this. A lot of times, investors spend all their energy focusing on where the money came from, but they completely forget they also have to prove how it actually moved. Keeping these two concepts distinct, that is the secret to a successful filing. On one side, you have source of funds, which proves the lawful origin. Things like your salary, a business profit, or the sale of an asset. But the path of funds is the literal step-by-step movement of that money to the new commercial enterprise. USCIS treats both of these equally, and you'd be surprised how many recent denials stem entirely from the path, not the source.
Because when you're preparing your petition, you've kind of got to imagine an adjudicator staring at every single bank statement, every single transfer, and relentlessly asking themselves, okay, so what happened next? Your evidence must clearly and definitively answer that question at every single stage of your transaction timeline.
Section 3. Common documentation minefields. 8 traps you absolutely need to avoid.
Now, what's really interesting about this slide is how easily applicants fall into trap number 1, which is commingling funds. Now that we know what adjudicators look for, let's walk into the minefield. If you deposit your EB-5 capital into an account that is also receiving your everyday salary, business income, or random gifts, well, you've just created a massive headache for yourself. USCIS won't just assume your investment came from the clean slice of that account pie. By mixing the money, you force yourself to document every single deposit. The simple fix here? Open a dedicated, segregated account strictly for your EB-5 funds.
Trap number 2 is a big one. Skipping tax compliance evidence. Money that was earned legitimately but never properly taxed in your home country simply does not meet the lawfully obtained standard. It really doesn't matter if nobody disputes where the cash came from. You must bring years of personal and corporate tax filings to the table. And hey, if your jurisdiction genuinely had no tax obligation, you have to bring official documentation proving that too. Silence is a red flag for them for sure.
Let's see how this builds into our remaining pitfalls. We'll rapid fire through these. First, vague labels. Calling something savings isn't enough. You need a full breakdown of exactly how those savings accumulated. Next, under-documenting gifts. You have to prove the donor obtained those funds lawfully, complete with their tax records and a formal gift letter. Then there's cryptocurrency. This is a massive growing problem area. If your money touched crypto, you've got to document the original coin purchase and the fiat currency that funded it. A simple conversion receipt absolutely won't cut it. Fourth, guaranteed returns. Your capital must be genuinely at risk. Any side agreement promising your principal back completely undermines the investment. And finally, ignoring local remittance rules, like India's liberalized remittance scheme. Bypassing those laws is an immediate glaring red flag.
Section 4. The 2026 adjudication changes. We're entering a much stricter environment.
Now, the traps we just discussed are pretty timeless, but the review environment itself is getting even tighter. The year 2026 marks a real turning point where the old safety net is basically gone. Building a petition on the assumption that you can just submit a rough draft and fix the paperwork gaps later when they ask for it, that is now a highly, highly risky bet.
And this breakdown brilliantly illustrates exactly what I mean. We are seeing 3 massive shifts in how applications are being reviewed right now. First off, denials without a prior request for evidence are increasing. USCIS is placing heavy weight on your initial filing. Second, older financial records are facing intense skepticism. If money changed hands a decade ago, it's incredibly hard to document to today's strict standards. And third, escrow structures are completely under the microscope. Even if your personal funds are 100% clean, a non-compliant project escrow arrangement can still tank your petition.
Section 5. Building a bulletproof file. Let's talk about your action plan.
The good news here is that smooth approvals go to the people who are meticulously organized early on, not necessarily those with simple financial histories. Here is your actionable checklist. Step 1. Start your documentation 12 to 18 months before filing. Keep in mind, attorneys generally recommend gathering 7 full years of records. Step 2. Open that segregated bank account early. Step 3. Secure certified translations and apostilles well in advance. And Step 4. Coordinate all this prep with your broader immigration timeline, because finding gaps early means you can actually fix them, rather than discovering them later in a devastating denial letter.
So the crucial point is this: you must adopt a rigorous mindset. Treat the origin of every single dollar as something you will need to defend twice. You have to defend it once on paper in your initial packet, and you have to be ready to defend it a second time if an adjudicator has follow-up questions.
So I'll leave you with this. Will your paper trail survive the 2026 scrutiny? Look, these rules aren't designed to trap honest investors, but they absolutely will catch sloppy documentation. Don't do this in a vacuum. Seek a second set of eyes, like the team at EB-5 Choice, to review your funding structure before you submit anything. Because at the end of the day, when $1 million in your family's future are on the line, can you really afford to let a missing bank statement be the reason you're denied? Thanks so much for joining me on this explainer, and I will see you next time.